and welcome to today's Commodities Corner. I'm Monica Gibson and I'm joined down the line by Steve Hardcastle, part of the Industrial Commodities team with Sucden Financial Ltd. Steve, if we look firstly at platinum and palladium, one of the major factors is that production is heavily concentrated in just two countries. South Africa and Russia together produce nearly 86% of all the world's platinum. Similarly, those two countries also account for nearly 80% of the palladium supply. Now, South African mining strikes meant companies there lost as much as 15 billion rand, according to National Treasury estimates. Russia's problem is a bit different. Reserves are simply in decline. Now, with this in mind, what is your outlook for these two metals?
Well, to put them into their context, platinum had been running very, very strongly late last year and early this year, up to a price level of around 1575, where there was and there still is heavy technical selling pressure. It subsequently slipped alongside gold when we had the issues surrounding the euro and with Cyprus and the deposit. You remember that whole story about the deposits. Subsequently, we had more stories coming out of South Africa regarding the strike situations at Amplats and at Lonmin, two of who represent the majority of the South African platinum palladium production. So far as platinum is concerned, I am expecting selling pressure somewhere between 1530 and 1550. It's currently trading at 1457, incidentally. So I'm looking at an $80 or $90 increase over the next couple of months. I can't really see any downside danger, but there is plenty of technical support around the 1420 area. Because the other major influence on precious metals is the activity of the funds, the ETFs, etc., etc. But the emphasis right now, so far as the fund money flows are concerned, we will also seen in the press that the equities markets are picking up strongly. And this can be attributed to flows of funds moving into different asset classes, i.e. equities at the moment. I really can't see much downside risk unless we have another situation blowing up in Europe, which would badly affect the euro again. So I can see prices going over 1500, maybe as high as 1530 area for platinum. And palladium is currently trading at 737.5. 775 is a technical resistance area. It should, I think, move up to that sort of area, somewhere between 765 and 775. And on the downside, again, I really can't see much risk unless, as I explained for platinum, we have the European problems again. But there's strong support at 1680. So I think those are the ranges for those two metals for the next couple of months.
New rules from China to control capital inflows are likely to end commodity financing deals, hurting the short-term outlook for copper. Now, Goldman Sachs sees downside risk to its 6-month target of $8,000 a tonne and unwound a September delivery recommendation at a 3% loss. But just how heavily do you think this will affect copper supply and demand?
Well, firstly, our projections for copper were never as high as $8,000 over the next couple of months. Our target, if you like, our expectation, was somewhere around the 7,500 area. We actually reached 7,533 yesterday. And then, of course, we had quite a big sell-off overnight, aided by the reports coming out regarding the Chinese rule changes. The Chinese government are concerned about money flows in and out of China, and they have targeted the copper financing operations, which have been going on for some years now. And so to that extent, then, and the comments from Goldman, I do agree that it will, or it should, impact those holdings of copper. But I would also add that that copper is being financed currently under the Chinese copper financing deals. But we have to realize and bear in mind that they're not the only financing deals in operation at the moment. So looking forward, I believe that copper will range. I see a floor for copper of around 6,900, 7,000 at the moment. There is heavy resistance around the 75-50 area. It does have the potential to reach around about 7,700, but I don't see it in the short term. And once this news from China has been digested, then I think you'll probably see the prices stabilising again.
I understand that overall you remain bullish for aluminium's demand in the longer term, but feel supply side will remain bearish on the grounds that there is an abundant idle capacity which could be reactivated to accommodate any rise in Chinese and North American growth. But how do you think this will affect price in your opinion, and what other economic pitfalls could affect aluminium's performance moving forward?
Yes, well, the two main market drivers for aluminium are the high level of stocks and the cost of energy. You have to remember that something like 60% of the cost of producing aluminium is energy. Now, the outlook for aluminium demand is still fairly good, but not at the same. It's not increasing at the same rate as production. And so I think that this current situation will last for some time, until such a time maybe as the financing operations no longer remain viable. In other words, if interest rates go up, then it would be attractive for the funds that are flowing into aluminium at the moment to go elsewhere, with higher interest rates. So, and I can't really see that happening for some time yet either. So I think the aluminium market will trade in the range, fairly well supported or strongly supported around about 1,800, but I really don't see it much higher than 2,200, 2,250 over the coming months.
Steve, thank you very much for your insights today. Well, that's all for today's Commodities Corner. Click back to Dukascopy TV for an in-depth interview looking at the euro with my colleague Natalie MacDonald. Goodbye for now.